Let's talk about the dollar for a second. Since April 2nd, basically since the start of the second quarter, we've seen the dollar fall about 6%. Historically, how big of a move is that? And do you see that as a potential warning sign for equity investors?
I think, yeah, clearly the decline in the dollar here reflects this loss of confidence in U.S. trade, security, and perhaps even fiscal policy, because you also see a bit of a divergence between the dollar index and the rate differential. I think that reflects this policy uncertainty. But I think, the key issue here is that the U.S. protectionist trade policies is an ongoing drag on the U.S. dollar, right? For three reasons. I mean, first of all, higher tariffs, right? I mean, you've got the average effective tariff rate in the U.S. went from 2% earlier this year to about 18% right now. So that's a downside risk to growth, upside risk to inflation. That's bearish for the U.S. dollar. Secondly, you've got the ongoing trade war, right, that threatens to accelerate the declining role of the dollar as a primary reserve currency. And thirdly, I look at the policy in general. The Trump administration is trying to and aiming to narrow the trade deficit, right? Well, the policies aimed at narrowing the trade deficit means you've got less U.S. dollar flowing into overseas, and those dollars, well, will find there'll be less dollars flowing back into U.S. securities. So for all these reasons, we remain bearish on the U.S. dollar.
So it sounds like kind of a negative tailwind. The dollar seems to be in a downward trend just due to some of the tariffs and some of the policies when it comes to trade. And in your mind, that's also negative for U.S. equities because less dollars go there. I want to talk to you about the Fed as well. Fed minutes came out yesterday. What was your take on that? Not only what's your take on the Fed cutting down the line, but also how do you see the market continuing to react to it? Markets finished higher yesterday, but do you see a reaction today and other days going forward to the idea that the Fed seems to be kind of in a pause mode?
Yeah, that's right, Frank. I mean, there was no real policy or new policy insights from the FOMC minute. What was interesting is that it did confirm that a couple of participants were open to a July rate cut. Again, that's not surprising. I think the most likely candidate for a rate cut in July, judging from the recent comments, are Christopher Whaler and Michelle Bauman. More importantly, is that the minutes also highlighted that the bulk of participants expect no policy changes this year, which again is in line with the recent dot plots from the Fed, right? The dot plot still implied 50 basis points of easing in 2025, but the distribution of those dots were less dovish because you had more participants, I believe 7 versus 4, looking for no change this year. So from that perspective, the Fed, this wait and see message from the Fed is intact. Now, my concern is that this patient approach to easing from the Fed is being drowned out by political pressure to cut the Fed funds rate, right? And that's a big drag here, I believe, for the U.S. dollar.